How's it going, Oracles? I just wanted to share a little of my thoughts about today's market reaction to the CPI data while I'm waiting for my son to get out of his golf practice. So yes, CPI came in higher than expected. We were expecting an 8.1% year over year. We got an 8.3. We were expecting a 0.2% month over month, and we got a 0.3. So the market obviously reacted negatively to this. We saw a major crash today. Crypto is crashing. And it's just an ugly fire mess in the market right now. Talking to William Reed in the comments earlier today, discussing how he believes that $200 to $300 will be the bottom for Tesla. I mean, it's a possibility. I like to share with you guys all of my opinions, everything I hear from all of you as far as what could potentially happen, whether I think it's going to happen or not. We're in a market right now where anything is possible. So I just want to present to you guys all the different possibilities that are out there. And so 200, 300, I'm not saying it's going to happen, but it is a possibility. Just the way the market's moving, looking at it realistically, we've got 12 to 18 months most likely before the Fed stops raising interest rates. Historically, the market does not turn around until the Fed stops raising interest rates. So that is a long time to go of either sideways or downward trading that we can see until the market turns around. So can we see 200 to 300 in Tesla? Again, it's a possibility. I don't think we'll go that low, but I do see 600 if we continue to go as ugly as we are. 600 is a possibility. Now, the Fed may come out and do a mid-meeting before they get to their next FOMC meeting and decide that they're going to raise rates in the meantime. It's totally possible. They might freak out. They might say, hey, we need to do a 100 basis point hike because inflation's not coming down fast enough. We need to catch it now. Thinking about the fact that gas prices are still going up right now could lead to a potentially higher inflation CPI data reading coming in June. So lots of uncertainty. Obviously, uncertainty is what the market hates the most. And when we see all negative numbers when it comes to uncertainty, it's bad. So right now, I'm not in a place where I'm going to be selling anything. Everything is just so beaten down for me. I'm not taking that big of a loss. So I'm just gonna, like I said from the beginning, cash flow generation is going to rule this year. As much cash flow as you can have coming in to be able to invest in small increments along the way. We never know what it's going to turn. We never know when that's going to happen. So, we can possibly wait for a bottom and see a clear sign of turnaround. I'm not. I'm just going to buy little bits here and there on the way down, lower my dollar cost average in my favorite high conviction stocks. Obviously, Tesla is my number one, and then take it from there. Because when we turn around, and we will, I'll just have a better foothold of where we can be. Now, going back to what another person had said in the comments, this is probably back in end of February, saying that we are in a massive dead cat bounce. And quite honestly, looking at the fact that we have hit a lower low than we did in February in the SPY and the QQQ, tells me that that is a possible potential, that we are on a giant dead cat bounce and can go lower. So we shall wait and see what happens, but I will give you guys a full detailed update in the morning, and I'll see you later.